we're going to get started. Let me share the screen. Danny, you're always so good at reminding me when I'm not sharing screen, so you're in charge. I want to show you one more thing. Oops.
One question. Do we have to register for the Heyday thing?
Well, it'd be nice for head count, but we're just making up our own head count, knowing that everybody that registers doesn't always show up and vice versa. So we're just, huh?
Is it on EventBrite? Where do we register? Or is it through the Facebook event?
A Facebook event.
Okay, I said I'm going. Okay, that's all I need.
Okay, cool. Yeah, we're just kind of getting an idea, you know, do you expect 30 people or 50 people? Because when you're paying for food, the last thing you want to do is paying a lot of money for food and then it gets thrown away. It just breaks my heart to throw food away when you know you got starving people in other places, even in our community. So I don't want to do that. Go to the Realtor Association page and sign up through that Facebook so we can just head count there. But I also wanted to just show you one more thing. All of us as loan officers have access to this information. So anybody you're working with, we have an app where you can send your referrals to. If you have that app and you're using it, continue to do so. It's about to be replaced, so don't join if you aren't already using it. We're going to replace it with something bigger and better. Homebot is an incredible tool. And if you're not using it in your business, then you need to get with your favorite guild loan officer and get signed up, because the engagement's incredible. And gosh, 60% of our business is repeat referral. And I guarantee Homebot has a lot to do with that.
So you need to share your screen.
Oh, well, I thought I did. I'm so glad you said that. Let me see what I stopped short of. Okay, now is it there? Do you see it now, Jeff? It says on the, okay, cool. It says on the top. Okay, cool. There is a partner collateral book that's on that we can send to you. I have it just on my michellecastle.info page. Brandy has this available to her as well, so just reach out. The partner collateral book will tell you all that there is available in terms of marketing that we could do together, and you just send your headshot, all of your information and your logo, and tell us what you want to use. Jennifer, you and I are working on that, the door knockers. We're doing something really cool on door knockers. We're creating door knockers that have interest in what your house is worth with the QR code that goes to Homebot, interested in homes for sale, and another QR code that goes to the buyer section of Homebot. And then the strategy behind all that is just really, I am so tired of seeing signs in people's yards from realtors who aren't from this area and don't know our market. Our market is different. And so the whole messaging is, if you're thinking of buying or you're thinking of selling, please use someone local, and this is why it matters. So if anybody wants to partner, marketing is something we do really well, so we can help you in that area. The market has shifted and changed, so I know you guys are having to change. Yeah, Wi-Fi password. Yeah. And then there's a buyer's guide. And that buyer's guide, when you can download it, or we print those out and put them in folders that you guys can have in your car or your office to give to clients, and then you can add your stuff too. And then just some additional, here's a flip book of what Guild's all about, more information about Homebot. So just know we have the resources, whatever it is that you guys are wanting to do, we probably have it. So just ask.
So you're saying sign up for I don't got Homebot. Are you saying get on that or don't get on that?
Homebot you want to get on. So if you want to know and see more about Homebot, you just need to get on my calendar. And my calendar is virtual, so you guys can sign yourself up on my calendar. If you'll take a picture at the end of the slide, you'll have the information for that as well. All right, I want to talk to you guys about credit. And the reason that this is such an important topic right now is cost of living has risen a lot. Families of 4, you guys remember our household income in this area is I can't remember exactly. The cost of living in our area, and it's under like $65,000 or $70,000 a year. Not our cost of living, our household in this area. Cost of living has risen. Kids are very busy. Gas is high and you're running kids all over the place. Groceries are high. People are having a hard time paying bills. And so they've used credit cards a lot. Credit card usage is up record highs since December and is only climbing. Credit card interest rates are also climbing because the cost of money is climbing. My concern is people are about to get into trouble with their credit cards. Credit card companies in the past have proven, I mean, there's a proven track record that when times like we are experiencing happen, and their concern is that someone's not going to be able to pay their bills, they will start cutting people's credit limits. That makes their utilization ratio go up. With a high credit utilization goes your credit scores down, right? So my concern is we are about to be in a situation where someone who might have had a 720 credit score has lived on their credit cards for the last little bit, hoping that they'd just get over the hump while expenses are so much. And now they have a credit card bill with high interest and they're not even paying the interest every month, and it continues to roll. The average interest rate on credit cards is like 15 or 16%, but most of them, they can be up to 26. And when your credit limit is cut, some of the specials that you have, rolling those credit cards from low interest to low interest, you'll run out. I will personally tell you a story. When I was really sick, we had teenage kids in the house. We had multiple businesses we were running. We had rentals that people were moving out of, trashing, and we had that several houses in a row. No rental income. I was sick and not able to work at my fullest. My husband then went to traveling, which meant my stress load and my workload just increased. And we had all these businesses going on. And it was at a time where it was very much like this: cost of living, cost of money, all of that was climbing. And I was living off of credit cards, and I thought I was being really smart because I would chase the zero interest credit cards. And so I would just roll over until I could not any longer. And had I raised my hand and gotten, if I had not been Pollyanna about it all and paused where I was at and made some really big changes, I could have probably avoided bankruptcy, but I waited too late. And we are seeing that with customers right now. Brandy's on this call, so she can tell you how many times people are calling us for a cash out refinance because they're in a financial jam and they waited too late to call us. So if you guys have clients and when you're talking to people, know and understand this is real. This isn't just every so often you might run across someone who is about to be in over their head or are already in over their head with credit, with debt. It's crippling. And it does not help you from a health standpoint either. And when you're unhealthy, it's expensive to get healthy. So there goes some more expenses. And then people are having to choose between pausing and really working on getting healthy versus continuing to move forward, hoping that if you ignore it long enough, it'll just correct itself. It doesn't correct itself, especially with the environment that we're going into. So I want you guys to know and understand credit enough, not for you to be an expert, but for you to be able to empathize and be compassionate and knowledgeable enough to say, listen, I don't know everything that there is to do about credit, but I know some folks that you can call. And I'm not saying you have to call a Guild mortgage loan officer. All loan officers are licensed and able to talk generally about credit. We cannot give credit advice because we don't have that license. But we know all about credit because we have to depend on people having good credit and what that means for loan programs. So what I'm going to share with you is just some basic information so that you feel a little bit better about that conversation. Let me get this on. What the heck? Hang on. My presentation's not going to work right. You know, I've told you guys, I don't know, over and over, I learn better by making my own mistakes and then sharing with you guys what that is. So this is one of those conversations that, okay, here we go to slideshow. That's what I was doing wrong. It's covered up. All right, so understanding and improving credit scores. So what is your credit score? When I got in the business in 95, credit scores wasn't even a thing. Credit scores, the FICO credit scores came about that period of time. But the credit scores are supposed to determine the likelihood that someone would default on a loan, not determined based on whether or not someone will pay their bills. So credit scores are so dependent upon someone's personal credit portfolio of how they've taken care of credit in the past, but also it's trying to predict their ability to pay in the future. And that's what credit scores are supposed to tell us. Now, we as lenders have, each loan program has its credit score requirement, a minimum credit score requirement. And we're going to go over that in just a few minutes. But please know and understand that your clients typically, it's this day and age, most of them have an idea what the credit scores are. But it's not going to be the same when I pull their credit, because everybody's credit models look a little bit different. When you're buying a car, it's going to look a little bit different than what it is whenever you're applying for a home loan. And it's going to look a little bit different than if you were pulling your credit scores as a consumer. So their credit score is going to give us an idea what we can expect, but it's not accurate. It's not the same as when we pull a credit report. The consumer scores are typically about 50 or 60 points higher than, or at least 30 points higher than what they will be when we pull their credit report. So if someone, we ask that question, have you been monitoring your credit? Most people now say yes. What do you see as your credit score? They'll tell us, what credit model are you using? Because every one of those credit models, the scoring system is different. So even within the consumer credit score model, there's a bazillion different models out there. So it's not a one size fits all. But in the mortgage world, we all use FICO. And so that is the baseline credit score that we all use. So if someone were to have talked to First United and they had their credit pulled and their credit was a 686, if we pull their credit score about the same time, where all the information that was reported on credit on First United is reported on ours and there's no difference, it will be the same score. If there's a difference in score, it's because the information was different when we pulled our credit report versus them. For instance, maybe a credit card just posted and the balance was just paid down to zero, but when Tanya or First United pulled a credit report, it was maxed out. Her score is going to be lower than what my score would be based on that information. So sometimes good credit scores is all about timing, honestly. So this is a slide I like to show, and this would be such a great one to even show on social media. If you'll look, the cost of credit is incredible. The cost of poor credit versus good credit. Just as an example, I mean, look, if you were auto loans at 5.1%, if you had great credit versus 18.9, you know what a difference in monthly payment that would be? It's expensive to have bad credit. It is so expensive to have bad credit. People with bad credit who need the break the most are going to pay the most. But this is a great eye opener right here on what that cost difference is.
You're sending us that slide so we can post it, right?
Mm-hmm.
Thank you.
Yep. Yep, you sure can. Just do a screenshot and post that on your site. I think knowledge is power, and people need to know and understand this information right now before they get themselves into further trouble. But the difference in good credit and bad credit, it's not just about making your payments on time. It's also the age of the accounts. So if we have someone that's 23 years old and barely has any credit history versus someone who's 75 years old who's had many years of credit history, typically we're going to see higher scores even if the credit trade lines, open credit trade lines are exactly the same. Someone older is typically going to have the higher scores because they've had more accounts, more history. Credit mix matters. If someone, all they have on their credit report is student loans and charge-offs, it's going to be hard to have a good score. But if someone has charge-offs, student loans, credit cards, and a car payment, and they're not all maxed out on all of that stuff, they'll have better scores than someone who has the same charge-offs with the same person for the same. I mean, like if all the information on the charge-off was the same, but you had the difference in the mix of credit, the one with the better mix of credit is going to have a better credit score.
Hey, Michelle.
And then credit, yeah.
Hey, on credit cards, you have, and something I've never understood is that whenever you pay them completely off, that you leave the account open and not close the account, because the account hurts your credit.
Yes, it does.
How does that work?
That is a good lead-in question to the credit utilization. So credit utilization. So in that case, Danny, you have the more credit you have available to you and the less amount of debt you have based on that availability will give you better scores. So say you have a Lowe's credit card and you open the credit card up because you were doing remodeling 2 years ago. And you took advantage of the 0 interest on Lowe's and you just made monthly payments with the plans to have it paid off within 2 years. So now you have this Lowe's credit card, you're not using it anymore. The remodel's done. You even want to forget you have that card so you don't end up buying a sectional in the lawn and garden area just because you can. So if you leave that account open, you now still have that credit limit available to you, but it's a 0 balance. If you were to close that account, you no longer have that $2,000 credit available that you're not using, and it will lower your scores. So having credit available to you and show that you do have the discipline to not use it will increase your credit scores. If you don't have the discipline to not use those credit cards, put them in a safe, but leave them open.
Well, everybody gets them just for emergencies, right?
Right? Exactly. But leaving it open could also be somewhat dangerous, because now if someone were to steal your identity, you have all of these credit cards with balances available, right? So if you're going to have open credit cards that are paid off, that are going to be in a drawer somewhere, so you're not getting a monthly bill and you're not seeing what the activities are, you better have credit monitoring on your account. So that if someone were to all of a sudden fraudulently start using your credit card, you would know about it. So if you are on credit monitoring, please open those emails, because you are on credit monitoring on purpose. So you can make sure that there's not something that pops up that you are not aware of. Now, of course, bad credit, the things that you can do to get yourself in a situation where you're back to that slide we were just on and you're paying more interest than what you should. Late payments obviously matter. Maxed out credit lines matters a lot. 33% of your credit score is made up of how much credit you are using that is available to you. So maxed out credit cards will lower your score super fast. So will defaulted loans, including student loans, liens and judgments, or any of those public record items. And we're going to go over those more specifically. But this is how credit scores are calculated in the mortgage world. This isn't a bad thing for you guys just to do a screenshot right here and just say, hey, I was at class today and look what I learned. If you have any questions about credit, you got to have credit to buy a house unless you're paying cash. Ask me. If you're thinking about buying a house in the next 6 months, let's talk now. Because if anybody needs to work on their credit scores, they need to get going on it right now. And give themselves 6 months to get it taken care of. We got some pictures going on here, so I'm trying to stay out of the way.
I don't have a computer, so.
Yeah, no, you're good.
So I just need to get it up there.
Yep.
Michelle,
Michelle,
I think we
you were
actually
going to share
have a
these slides,
flyer.
right?
I am going to share.
Okay, yeah.
I think we have a flyer that has this on there that we could actually co-partner to, if anybody wanted that.
Yes, you guys, all of these flyers, most of these slides that you guys see, or not most of them, several of these slides, you can partner and create and just have them available whenever you're doing open houses. Hey, people are not going to raise their hand and say, I have bad credit, and so I'm scared I can't buy a house. Instead, they'll give you all other kind of excuses. So if you have this information available and you don't make a big deal of it, but they can pick it up knowing that they really need to work on their credit before they call anybody, it's a good idea to do this and make sure your name's on the bottom of it. It's always been interesting to me. If for instance, if you have an open house and you have people, quite a few people to show up, if you have flyers like VA, FHA, conventional, blah, 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 and those flyers have credit scores on there, watch, do the study yourself, but watch, they will pick up the flyer that they think, a flyer to a loan program that they think will be more beneficial to them based on those credit scores stated on the flyer. But they're not going to tell you, hey, I got a 560 credit score, and I see if I go FHA, I can do it with a 540. They're not going to tell you that, but they will pick up the flyer because it has that information on there. All right, how to establish credit. So credit cards in your name. Credit cards, if someone is brand new to the credit world, credit cards is the way to go to establish credit. The first place for someone to go to get a credit card, they want to ask their bank first. If their bank has credit card options, that's always a good option for them. If not, Capital One is a great place to go. Brandy, what are some of the other credit card companies you recommend?
Premier, I think, is one of them. That's pretty good.
I think that one's a Visa, isn't it? I don't remember. If you guys, Michael, this question was asked on my Facebook, and I tagged Michael Stockton, and he gave some information on that. So maybe Brandy can find that in just a few minutes on my Facebook.
Capital One, HSBC, Orchard Bank, or First Premier.
Okay, there you go.
I can put it in the chat too.
Oh, awesome. So obtaining that credit card in your name, but it's really important that you do it right. And that is, I tell folks all the time, the limit doesn't matter as long as you're staying 10% below the limit. Because remember, again, when you're looking at the credit utilization, which is down here at the bottom, outstanding debt, it's 30% of the credit score is based on utilization. So they're not getting the credit cards to actually use them. If you do not have the discipline, again, and I say that because I don't, which is why I have to hide money and credit cards for myself, then you could just put one of those recurring bills like your Dish Network or something on the credit card. So it's an automatic charge every single month. So you're not carrying the card. So you could have the card, hide it from yourself, put it in the safe, but have a recurring bill on there once a month, and then set it up to get auto paid once a month. So the bill is charged, the bill is paid, all automated, so you don't end up using that credit card. But that credit utilization, doing that makes a huge difference in your credit scores. Keep your credit scores no greater than a 10% balance charged. That part is really important. Put the charges on the card monthly. They need to see monthly activity. If you were to get a credit card and you don't do anything with it, but put it in the safe, it's not going to build your credit like utilizing that credit, but doing it correctly. So that's the magic right there. Again, you guys are going to get these slides, but wouldn't that be a cool post? Telling people how to have great credit scores. All right, 5 steps to better credit. Check for any credit report errors. That part is when you have your credit monitored, a credit card, oh my gosh, what's this, the free site, Brandy, I just went blank.
Credit Karma? Sorry.
No, annualcreditreport.com. Annualcreditreport.com, you get a free copy of your credit report once a year. It's the free service. They're not going to, well, I can't tell you they won't harass you to buy something because everybody's found a way to do that. So, but it's not a monthly subscription. If you're going to do a monthly subscription where you're monitoring your credit report, you're going to use, all of them give you the ability to look at your errors and dispute. The problem is if someone is looking to dispute items on the credit report and they're going to be buying a house soon, I always tell people don't dispute anything right now, because disputes on a credit report can keep someone from being able to get the loan. Let me say that again. Disputes on credit reports oftentimes keep someone from being able to get a loan until the dispute's resolved. The problem is the creditors don't always resolve those disputes. So now you have a dispute on your credit report you can't get off without paying them.
Michelle,
Mm-hmm.
if you do the annual credit report.com, does that count as a hard pull on your credit?
Nope.
Okay.
Good question. You always have good questions, so keep asking them. If you do have some items on your credit report that aren't correct, maybe there's some old collections on there. Medical bills is a big thing. Fortunately, after July 1st, we had some major changes in the way the medical collection companies can report on your credit report. They have to wait 1 full year now to report on your credit report, which is good because a lot of people, I mean, right now I'm going through all kind of exploratory stuff to figure out what healthy looks like for me, which means I'm going to get a bazillion bills from a bazillion different places. And some of them are going to look legit and some of them aren't. And some of them I'm going to be expecting insurance to pay and insurance is going to reject. And I'm going to have to go all back and forth, back and forth. Well, what would happen in the past is while I'm trying to figure out what do I owe and what don't I owe and what is insurance supposed to pay, and all of a sudden I got a collection on my credit report because the medical facility didn't think they got paid fast enough. And I'm expecting somebody else to pick up the tab because I'm spending $1,000 a month on health insurance. So surely somebody's going to pay some of these bills for me, right? So now they have to wait a year before they can report that information. That's huge. That alone, we had one scenario, and that's also a Facebook post if you want to share that out. If you're going to start talking about credit to your audience, which is a very important topic, we had an example the other day, and it's on my personal Facebook page. I think Brandy shared it out too, where we had someone that didn't qualify because of credit scores in a medical bills, plural. We re-pull their credit now with a new law. Those medical bills are gone. Their credit score went up like 50, 60 points, 60, 70 points, whatever it was. Now they qualify to buy a house when they didn't before. So if you've got people that did not, and what you'll see, you guys, is oftentimes you'll refer a client to a lender will talk to that person and put together a plan for them to buy the house, and they don't either think it's affordable for them, or we tell them, no, we can't help you, and they ghost you and you don't know why. It's because they're embarrassed, right? So the more that you guys are talking about this stuff compassionately, the more likely they are to not ghost you, but see you as an ally helping them. So knowledge is power. You can negotiate with these creditors. The problem is once you have something on your credit report, the best thing to do is to see if you can negotiate to pay a nominal amount of money, but get them to remove those items off your credit report. That's a really big deal. Because removing a credit item versus it showing paid can be sometimes the difference in a credit score by 60 or 70 points. It's crazy. Pay off all past due balances. Brandy and I want to advise you on what you should and should not pay off, what you should and should not negotiate, what you should or should not ask to be deleted. Don't go rogue on this, because if we don't do it strategically, Brandy, there's chats in there. I hope you guys are monitoring that. Okay. If it's not done strategically, it could cause more harm than good. So know enough to demonstrate your compassion and your empathy, and to show that you are, as a professional, learning how to better serve others. But don't be the expert, because if they do it wrong in the wrong order, it will cause more harm than good. But I want you guys to still understand what all goes behind all that. And then new credit card applications and large purchases. Good gosh, let me just tell you this scenario. So we had this one customer. She only qualified for a $135,000 house. How many homes are available right now that go FHA for $135,000? Okay, so it took her forever to find something. She finally finds this perfect house. It will go FHA. It's little bitty. It's okay because she's just one person in the household. She finds this house last weekend. We've been trying to tell people over and over, please let us pull a new credit report because yours is expired and interest rates are up. So what you qualified for 6 months ago may not be what you qualify for now. People are seeing price reductions. So people that were in the market, got out of the market, are now getting back into the market. There's a big difference in what they'll qualify for now based on new interest rates. It's changed even drastically in the last 45 days. So we try to get people to allow us to update their pre-approvals because their pre-approvals are expired, but they're still out house hunting and you guys are still showing. And I'm not saying you specifically, but just in general. So what ends up happening in this case is, guess what she went and bought last month? A car. She barely qualified for this $135,000 house. Not only now are her credit scores tanked because she now has a new installment loan, her debt to income is too high. It's at 63%. I cannot get a loan for her. She finds a needle in a haystack and now we can't help her thread it because of credit and credit scores. So unless you guys are working cash, this stuff is so important for you to know.
And Michelle, can she sell the car and redo the credit thing, or is it tanked?
Well, our advice to her is to do something to get that credit report out of her name. I mean, that car loan, whether that means someone needs to refinance it in their name, which is not easy to do. And I don't know what the cost of cars right now. Anyway, that's an option. The other option was for her to go find a co-signer, which she didn't have before, but maybe she will now since she's highly motivated. She found a house that she loves that actually fit her budget. So Jeff, that's a really good question. And there are times that we do have people, but the problem is the inquiries and the installment loan is still there. So she still has a new installment loan that's now paid off. So it's still going to impact her scores at some capacity. I just don't know how much. But that is a great option. And I love that you're thinking outside the box. But getting a new installment loan lowers your score. A new credit card won't unless you're starting to put charges on there and you're not paying them off monthly. The reason an installment loan hurts your scores in the immediate is because now you have a 35, well gosh, can you even buy a car for 35 grand? You have a $55,000 loan here and you have no payment history. It's a brand new loan. And remember, credit scores are used to determine whether they have the ability to pay in the future. We don't know that yet. So for that reason, you're going to have a lower credit score because we have to factor. I mean, you haven't proven that you can now pay $650 a month when you've been paying $400 a month on a car payment. So your scores are going to go down. So Jeff, the scores would still be affected, but it would no longer be calculated in the utilization because the account is closed. So it won't be an offset, but it would help. Credit cards and medical bills. What happens if I don't pay my credit card or medical bills? And what is a judgment or a lien? So let's just talk about those real quick. An unpaid credit card, and I saw this happen years and years ago. Credit card companies can and will file liens and file judgments. If anyone ever has a credit card judgment, a student loan judgment, any judgment on their credit report, that has to be cleared before they get clear title.
Oh. Yeah, you're gonna miss that.
Veronica, mute yourself. So here's the problem. People don't know that because if they're not monitoring their credit report or paying attention, you're not going to know about this judgment. And guess what? We won't know anymore. We won't know about that judgment when we pull the credit report because judgments and liens are no longer on the credit reports. The only way we find that is whenever they go under contract, we at the very beginning of the contract process is to pull a fraud report and those judgments would show up there. But it's so expensive to pull those reports. We don't pull them until we are to the point where they're super serious. It doesn't happen very often, but my concern is with these credit card balances going like they are, if people skip and they don't make their payments, credit card companies do have the ability to file a judgment. And judgments affect your real estate transactions. Liens affect your real estate transactions, and liens can be filed for unpaid bills as well. In Texas, we have some layers of protection for their homestead, but not for their other properties. Student loans can also turn to judgments and liens. They are also a federal debt. So if someone is not taking care of their student loans, guess what loan programs they're not able to use? FHA, VA, or USDA. And people that typically don't have the ability to take care of themselves in a healthy financial way need those loan programs, and they can't use them because of student loan defaults. Here's a concern that I have right now on student loans. They've been deferred. They were automatically deferred. No one had to do anything to defer them. They are now due. We are all paranoid of fraud and scams. So we're getting emails, people with student loans, I don't have any student loans, so in this case, thank goodness. People are getting notification from the student loan servicer that says, I need you to fill out this paperwork because we got to get you back into paying back your student loans. Time's up. You got to start paying us. But people aren't paying attention to those emails, possibly. And so my concern is all of these student loans that have been deferment, that people need to be paying attention because they don't want to miss out on their first payments and be in default, because that will affect their buying power. Remember, our largest sector of home buyers right now are Gen Zs. And guess what? They have student loans. So please be talking about this. This is another good slide for you guys to use. And I put this in here just so that you can see difference in cost of bad credit.
Wow. That's big.
That's more than double in interest alone because of credit. So how important is this conversation? As professionals have it, you don't have to be the expert. All you got to do is make people aware that they need to ask questions and pay attention. It's huge. It's really big. So there's a couple of budget. That's another really good conversation for you guys to be having on social. How many of you guys are right now putting yourself on a strict budget? A budget? Talk about it. Budgets aren't easy. I remember whenever I had to go, and I'm fixing to be back on a strict budget. Just monitoring your expenses once a month. Oh, so painful, but so important. I signed up for a coaching program about 5 or 6 years ago. And part of that coaching program, we had to turn in our financials. Once a month, we had to turn in our financials. And we had to show, based on our bank account, that we were saving X percentage. I mean, the requirement was 20% of our income. And we also had to give 10% of our income. 30% was gone. But the scariest part about the entire coaching program was that meant that my husband and I had to sit down together and look over our budget together once a month. I did not want to see that information. I don't want to see how much I'm spending on stupid shit. Right? But I needed it. And it made a huge difference in where I am today financially, had I not been made to do it. So I leave this in here because budgeting is so important. And you guys could be talking about this as well, because we all need a budget. But we also understand the fears of the budget. We also understand the guilt that you might be feeling whenever you do look at your expenses, because you spent that money and it's gone. You can't get it back once you've spent it. So talk about that, because it's real. I mean, everybody's having a hard time stretching that dollar, but it takes some accountability. Sometimes it means a buddy system. But know what you're currently spending and figure out how you can save. I did a post the other day just talking about what you could do with, instead of spending that money at Starbucks, if you were to save this amount of money a day, how much a month that would be, and what you could do with that money instead, and how much better off you would be. Talk about it, but also feel it inside, because you guys are more authentic whenever you're speaking from experience, whenever you're talking about these things. but there's an app called Expensify that you can use. Now, Brandy, tell us again what that app is that I told you yesterday I was going to sign up for, but I passed out on the couch last night instead of doing it. For
Truebill.
Truebill.
Mm-hmm.
So I know for a fact I have subscriptions to things that are on auto renewal that I don't use, and I totally forgot I signed up for. So I knew Brandy was using this app, and I asked her what it was. Truebill. You can attach it to your account. You can attach it to your credit cards, but it will skim for all of those subscriptions that you have and give you the ability to opt out or cancel. Yes, because we're blowing money, but you don't know what you're blowing unless you're paying attention to your budget. So some of the things that you can do to raise your credit score, oops, there we go. Create credit stability, pay on time and as agreed. That is so much easier to do now because you have automation. Know your credit limits. One of the ways that you can raise your credit score, if you've got a credit card you've had for a long time, contact them and see if they will raise your credit limit. You will be surprised how much that will increase your credit score. Just having your limit increased. And all you got to do is ask. Most of the time, if you've had a credit card for more than a year and you've been paying on time, they'll increase your limit. And increasing your limit will improve your scores. Just don't charge more because you increased your limit. And then I just cannot stress the importance, especially right now, because there is so much scamming going on. There's so much fraud going on. Monitor your credit. It says on these slides every 4 to 6 months. You need to be monitoring monthly right now. And if you have the right to dispute inaccurate information in your credit report, if it is inaccurate and you have documentation or proof it's inaccurate, and you're not looking to buy a house in the near future, dispute it. If you're looking at buying a house in the near future, give me the documentation that shows it's not correct. And let us handle it on our side the way it needs to be done to get a loan. And then you can dispute it later if that didn't work. All right. I put this slide on here so you guys can QR code straight to my calendar if you want to schedule some time to talk to Brandy and I about just some of your posting strategy around all of this. Or if you're wanting some of those marketing materials that we were talking about. Or if you really want some help with budgeting, I really don't mind going over y'all's budget and help you guys put some budgeting together. Been doing it for a long, long time. The most effective budgeting for me is to get the cash envelope system.
Yeah.
And I used it to survive 30 years ago, and I even thought about getting that back out. That means I got to start locking my house and my cars if I got to have cash around.
Everything else goes into savings.
Yeah.
Or pay debt.
The way I was able to save money, the way I've been able to save, does everybody have what they need off of this screen? Okay. I mean, for me, it's different. Brady and I are 100% commission. We don't get paid unless y'all get paid. And we'd really like to get paid. So please send us some contracts. We don't want to use credit cards to pay our bills. But anyway, the way I was able to do that. So we are still W-2, but we're commission only. So I set up for my money to go straight from Guild to my savings account, but not even a savings account that's attached to any of my other regular accounts because I wanted it out of sight, out of mind. Yeah. Sabrina in our office, her savings account is physically at another location also. So it's almost like putting your money into a safe that you forget the code to so that you don't touch those things. Whatever you got to do. It's just really important right now that we protect our credit, that we talk about credit because it's part of our business. You guys are showing houses. You need to know how they're going to pay for it before you even show it. And if they're going to borrow money, they need to talk to our lender early and often. because things are changing. And information on their credit report, when we pull a credit report, that credit report is typically good for 90 days, 120 for some loan programs. So once someone is pre-approved, keep them hot on finding a house, because I'm telling you, just like the story I shared with you, people will do some crazy stuff without realizing how it's impacting their ability to buy, like the customer that bought a car last month. She may have given up on finding a house and decided to buy a car, and then finds a house, as happens. So as soon as you get someone pre-approved, just know the credit report that we have, that we're using, is good, but it's only good for 90 to 120 days, depending on what loan program we're using. So the sooner they get under contract, the sooner they'll mess things. I mean, the sooner you don't have to worry about them messing things up, and us too. But if they are looking at houses and it's been a really long time, and then all of a sudden they call you again, please route them back to their lender to make sure they are still pre-approved, because rates have changed, which means buying power has changed. Credit card balances are increasing, which may impact their credit report and their credit scores and what loan program they qualify for or price range they qualify for. So knowing, I just want you guys armed with enough information to know when you need to route someone to someone to ask more questions, or for you to be providing the answers to their questions. But you don't have to be an expert at all of this. You just need to know what you need to know in order to send them to the right place. Brandy and I oftentimes have to refer people with credit challenges and questions to a credit expert. We know how to loan money, and credit matters to us, but we're not experts at it. We know enough just to know what we need to know in order to get the mortgage loan done. But if the credit report is really ugly and it needs a lot of work, it needs to go to someone who does that for a living. Because those credit bureaus and those creditors, remember, credit bureaus make money from the creditor. So it takes a while to convince the bureau to remove or re-record information, because they're getting paid by the creditor who's incorrectly reporting that information. They're not an advocate group. And sometimes it takes an expert who knows the laws that makes the creditors do what they're supposed to do, so the bureaus will update the information like they're supposed to. Those bureaus are not for the consumer. They are for the credit reporting. I mean, they're for the creditors. So I know you guys have a ton of questions, so please fire them off, ask. Carla, was that all clear mud?
Yeah, and I did kind of have a question. So back when you said to not cancel the card, but just get it to a zero balance and then put it away. Mark and I did that some years back with a Macy's credit card. And I didn't know that they kept charging me like a $3 a month late fee, or a monthly charge, which added late fees, which added. So I still, from like 6 years ago, have this on my credit report saying that I paid that account late because I didn't realize it was racking up monthly charges. How do you keep that from happening?
Credit monitoring. If you had your credit monitored, you would have gone, wait, what? Why do I have a $3 balance on this credit report? And then you could have discovered it then. Brandy just put Michael Stockton's information in there. He's a super nice guy. He's from Bonham, and he works out of his home office a lot now since COVID. But Carla, he may even be able to tell you on what you could do to get that off. I mean, you can't dispute it as incorrect information because it was correct information. You just weren't aware that that was happening.
Right.
So I don't know I don't know the best way to handle that, but Michael will.
Great. Thanks.
But that happens. That is the one thing that you get, that like Capital One. I still have my stupid Capital One account that I use to reestablish myself. Now, when I filed for bankruptcy, I was very strategic, and when I got out of bankruptcy, I had better scores than I had. Anyway, if you've got someone that's in a financial jam and they don't know what to do, hell, I've had myself in enough jams that I can speak by mistake, but also from just experience being in the business, and so can Brandy. But Carla, so like my Capital One, it charges me an annual fee, and I don't even use the card. I don't even need the card. So, one of the questions that I have for Michael Stockton is, I've had this card for 20 years. Should I cancel, or do I still keep paying that $50 fee? Would it cost me more money to get rid of that and not have that $50 fee? Would it cost me more money because it lowered my scores than what it would if I just keep paying it? Does that make sense? And those are the questions you have to ask yourself, and those are the answers that I don't know, but I know where to go to get answers. Jen, do you have any questions?
The only thing that crossed my mind through all of this, and it's a little off topic, but as you know, I kind of got stung this weekend on it, is making sure that your clients totally understand a pre-approval letter and the financial attributes to that letter, and make sure that they have read the whole thing. Mine, this past weekend, they just got, kind of read the caption at the top of it, said you're approved for $300,000, and they didn't drill down to exactly what everything they had to do to qualify for that, to close, and how much money they were going to have to close, which nullified the whole thing. And so, I think that's another responsibility that we get a little lax on. At least I can speak for myself, in assuming that they understand the pre-approval all the way through the settlement sheet, taking the time to go through it. It can stop a lot of heartache.
Absolutely. We see that often. People are just, and I don't know how to change this, you guys, but people are glancing, they're not reading. And if it's more than just a couple of bullets and it's paragraphs, the problem is the information we have to share isn't bullet points. I mean, these are people are spending $3 and $4 and $5 and $600,000. I can't bullet point that for you, but they're not reading, Danny, and you're not the only one. We see it all the time.
Yeah, because they're used to reading a snippet on Twitter, and they get everything they know out of that snippet.
Yep.
And it really takes time to go through and getting everybody slowed down long enough to analyze the documents.
Yeah. But I think too, the industry causes some of that confusion, because there's lenders out there issuing pre-approval letters that I call pre-qualification letters. A pre-approval is supposed to be basically an underwritten file, just not by an underwriter, which requires paperwork. Pre-qualification doesn't mean it's not worth the paper it's written on, because a pre-qualification is just saying, based on the information the customer's provided, well, hell, they don't know what their qualifying income is. All they know is what they are bringing home, or they know what is on their paycheck. But they don't know, I can't count all of that income, because maybe it's a new job. We have someone that we're working with right now. He got a job June 1st. But he'd been out of work for 18 months prior to that. Well, you have to be returned to work for 6 months or sometimes 12 months, depending on the loan program, before you can count that income. So if I were to stop at pre-qualification and not ask questions and not get paperwork, you guys might go write a contract. They might put down earnest money and option fee and order an inspection and be out almost $2,000. And then you find out later that once the lender actually looked at the paperwork, they don't qualify. And you've spent all of that time, they've spent all that money. You got a seller all excited that they finally, this is one of those times where sellers get excited about offers. They're not looking for multiple offers in some cases. They're just looking for an offer that makes sense for them. So there is another checklist that we can give you that is all the questions you should be asking from the lender. So it doesn't matter if you're on the buyer side or the seller side, you have got to have a relationship with the lender, because we're the ones writing the check. The customer's not writing the check, we are. So why would you not ask the lender, how do you need this contract to go for us to be able to get a check at the end of this transaction? If you're not asking those questions, you're going to have deals blow up. But whoever is writing the check is who you have a relationship with. You're serving the customer, but you also have to have a relationship with the person signing the check. If you can't get a hold of that person right now, when you're trying to help someone find a house, how in the hell are you going to get a hold of them when the appraisal comes in with some kind of weird lender required repair? Or, you know, if for some reason you're not sure if the lender's okay with the T19 exception or not, if you can't get someone to answer the phone. So your relationships with whoever's writing the checks are super important. So if you've got someone that found a lender outside on the internet somewhere, you have to be able to contact that lender and ask the questions. It's only fair. We are all professionals. So just rethink how you're doing that, and don't be scared to ask the questions. And if the lender barks at you for asking questions and says it's none of your business, it's not true. So don't take it personal. That's their problem, not yours. You're just doing your job. Because I do hear that from some of you guys. The lender wants to know why you're asking these questions. Well, because I want to make sure that the check's going to be at the closing table. So yeah, exactly. We're a few minutes early and I want to do a better job of making sure that we're on time, but I'm also available for questions for the next little bit. So if you have to bounce, that's perfectly fine. If you still have some questions, feel free to ask. Make sure if you're on this call and you want the slides and you want any of the handouts that you are signed up on EventBrite. Actually, it's closed out now, but always sign up on EventBrite, whether you're going to be here or in person, so that you get all of the supporting information. And just know, Brandy and I are here for you guys. You can ask any kind of questions at any time of the day. I mean, after midnight, I'm not going to answer you, but anyway, we're here for you.
Don't ever have to answer me after 8 or 9.
If I did, it's wine 30 and you probably won't want my answer. Actually, I don't drink anymore since I can't. So, all right. Bye, y'all. I'll stay here for a few minutes for anybody that has some more.
Very helpful, Michelle. It was very helpful.
I'm impressed so many of you guys showed up, because I didn't do a great job of doing some follow-up. So thank you for being here.
Thank you for always doing these wonderful classes.
You are very welcome. I don't know what we're talking about next week, but it'll be something good. All right. And then if you haven't already voted on what you wanted for the fall, go on to that group and